Asian stock markets fell as investors remain worried about the worsening political situation in South Korea and weak demand in China. The fall of the Syrian government caused oil prices to rise. South Korea's Kospi index drops by as much as 2.2% as public outcry over last week's temporary martial law intensifies. While some policymakers are calling for President Yoon Suk Yeol to step down. This has kept Korea in the spotlight. The Korean market continued to feel the effects of the opposition's threats to bring up Yoon's impeachment again. Even if he managed to survive the first round, that is, officials pledged to keep a careful eye on the country's market and economy on Monday. While the small-cap Kospi index fell over 3% to its lowest level since May 2020, joining the larger Kospi index in its fall, the won lost almost 0.5% of its value against the dollar. And following November's slowdown in consumer inflation in China, the equities benchmarks Hong Kong and mainland fell. The cautious tone is in line with investors' expectations for a week dominated by decisions made by central banks across 4 continents. A pivotal policy meeting in China and important inflation data from the US is also on the pipeline. Japanese markets edging higher after data showed growth figures were revised higher. The dollar, US treasuries and Wall Street futures were steady despite the widespread turmoil. Apart from the Syrian crisis, Saudi Arabia's larger than expected price cut for Asian importers following OPEC Plus's additional delay in a production boost nudged crude prices higher. However, bets against crude rose to the most since September despite the turmoil as weak demand weighs. Among other commodities, gold rose slightly in early trade on Monday following the end of a 6-month hiatus in gold purchases by the Chinese central bank in November.